Good afternoon, everyone. Thanks for joining us. Today, I have the distinct pleasure of moderating a webinar, which is going to cover how COVID-19 has had an impact on the current business and personal insurance line. My guests are Klein and Christina Welch. Klein is the CEO of PKIG. PKIG, Klein Insurance Group, is specialized in both business and personal insurance lines. They take pride in making sure that both business owners and individual customers have the proper insurance in place before the time that they actually have to use them. I've had the fortune of watching the agency really grow from being a startup to one of the fastest growing agencies in the state of Michigan. They're an incredible business, and I'm thrilled that we do a lot of work together with them. Christina Welch is also on this Zoom meeting, and she's the Executive Risk Manager and Head of Commercial Insurance Group for Klein Insurance Group. And she's been fielding many of the questions that we've been hearing in real time from her clients. So she's been a great resource for the firm, and we'll have some awesome insights to share with us. My name is Ari Fischman. I'm a certified financial planner. I specialize in all things insurance, and I have a strategic partnership with Telemis where basically it's my job to make sure that their clients are not overinsured, underinsured, insured inefficiently, ineffectively, and make sure that they just have the right coverages in place. I've been doing this over 20 years, and I love showing up, working each day, helping my clients make smart decisions that protect their assets, build legacies, and transfer wealth efficiently. So we're going to make this very conversational. We will start things off with some of the most common questions that we've already been getting. And then along the way, there's a Q&A box, and we would love to hear from the attendees as far as what questions that they have that we'll be answering throughout the webinar. So it's going to be a question and answer format, and hopefully a lot of great questions will come from the audience. I'm going to kick it off with some of the most frequent questions, and I'm going to start off with Phil. So Phil, just tell me, what have you been seeing? How's the insurance companies been reacting to the current situation with COVID-19 and how it's impacting your clients?
Yeah, well, obviously, first off, thank you for having me and Christina on the webinar. We look forward to answering any questions in regards to the insurance industry. I hope everybody out there is safe and healthy, and we're all going to get through this sometime in the near future, hopefully, and be back to normal. So hope everybody's doing well. Yeah, the insurance industry, obviously, they have taken notice, and just like any other industry, there's certain things that have affected the insurance industry from the standpoint of homeowners and business owners. A little bit more on the business owner side at the moment, only because obviously a lot of businesses are closed and financially they're in a little bit more of a struggle. From the personal lines side, the insurance industry knows a lot of people out there have lost their jobs at this point or are unemployed. So what is the insurance industry doing? They're doing everything they possibly can to help. We're going to talk a little bit about as far as the business and business interruption, and those are the major questions that a lot of people are asking about as far as the business owners are concerned. From a homeowner standpoint, obviously we're talking about people being able to afford their premiums and do different things. So the insurance industry has taken note and has decided that on the personal line side, they're giving discounts for the next 2 months because they realize that their losses will be less. People are driving less. They're using their policies for, on the auto side, a lot less at this moment. So they've decided, a lot of the carriers, almost all of them, have given some sort of premium relief to personal lines clients in the form of a discount off their auto insurance for at least the months of April and May. They may extend that to June or even further. And on the business side, they have, on a case-by-case basis, if your business is in a position where it is having trouble paying for their policy, the communication piece with your agent or your carrier is very important, because a lot of the carriers are working with business owners and personal clients to waive or push back premiums so that your policies don't lapse. The insurance industry understands at this point how important your insurance policy is. It may not pay the business interruption. I'll let Christina talk a little bit about that. But they do know how important to keep your coverages in place and not let them lapse, because other than the COVID, there's other things that can go wrong while this is going on. And so they've taken notice on that, and they've decided that they're going to help as much as they possibly can with relief going forward.
Thank you. So Christina, you're dealing on the front lines with your clients and your business owners that are going through. Many of them are still doing well. Some are going through tough times. And through this transition, I mean, what's been the biggest topic that you've been hearing as far as some questions that your business clients are asking about of you?
Yeah, great question. Some people are in a little bit better of a spot than others. So you kind of have to navigate based on, the individual person. But I'd say there's two really big questions. And the first one is, how can I collect my lost net income? That's, I'm losing out on business right now. Is there any way that I can collect on my business policy? And the answer is not really. And I say not really because there is a coverage called business interruption, which Phil was mentioning. And business interruption is designed to cover you if you have some sort of interruption in your business, and it's going to cover your lost net income. If you've got a mortgage, rent, big one is employee payroll, moving costs, any day-to-day operating expenses that you normally would have to incur or pay, it's designed to cover that. But the issue is, and this is the big question, is, well, why can't I access that coverage? And it's because policy wording says that there has to be a direct and physical loss. So if there's not a direct physical damage to your actual premises, you can't really trigger that coverage. So it's tricky because I guess it depends on how you present the claim. I have read that there's some business interruption claims during this time that's been paid out, but they're kind of crazy situations. So it's kind of a case by case thing right now.
Christina, what do you recommend that business owners do if they have questions about whether they feel like their business interruption might be covered or not? What would you recommend to them?
I say call. There's no harm. It's a little bit different on the home and the auto. Or if you have a claim on your home and you call in, just calling sometimes shows the carrier that there might be something wrong. On the commercial side, it's different. I would recommend, if you really think that there is some cause and you can demonstrate how COVID has caused some sort of physical damage to your business. I've been trying to think of an example. Like let's say you own a factory maybe, and you've got workers that somehow the COVID contaminated conveyor belts, and all the conveyor and HVAC system needed to be repaired. I can see how that could maybe be claimed, but I would say call, make the claim, see what happens. Or, I mean, the worst that can happen is you're denied and it doesn't really affect you in any negative way.
No, it's a great answer. How about employees? What are you, with workers' comp, how are any of the workers' comp policies paying out in an industry?
Yeah, great question. So it's the same case by case. So a work comp policy is designed to cover your employees if you're injured or any sort of occupational diseases. The only thing with occupational diseases is work comp policies exclude virus or communicable diseases. So what I have been reading is some states, and I think to include Michigan here soon, California for sure, Kentucky, I think Arkansas, the governors are coming out with a broadening clause. So any of the frontline workers, healthcare, doctors, first responders, people in grocery stores, daycares, I mean, they're kind of on the front lines. They're essential businesses. So I have been reading that they're going to broaden wording to include them no matter what. Of course, there's the people who kind of fight back on that and say, well, if we open up floodgates and everyone starts filing claims, then what happens to the premiums of work comp moving forward? Which, I mean, it's a good point, either side, but also if you're a healthcare doctor on the front lines, you're bound to get sick. So it's also a case by case situation. So we kind of just have to wait and see.
Well, for the most part, Christina, you're seeing that most of the work comp claims are not going, work comp and business interruption are not going to be covered due to COVID at the moment.
Yeah, at the moment, yes. I would say business interruption over work comp, most of those are being denied. there's a handful of lawsuits right now, people getting together saying this absolutely should be covered. And there's going to be lawsuits now, there's going to be lawsuits in the future. The only thing is, I agree kind of on both sides, but if the floodgates, like I said, are opened, then the cost of insurance is going to go up for everybody. So we just kind of have to.
It's one of those things that we always talk about, trying to insure people efficiently and effectively, not necessarily recommend to clients to get coverage that's not necessarily needed. So it's just interesting, Phil and I, and you were talking about this earlier, how if there was a pandemic clause in most policies, the opt-out rate would probably be extraordinarily high, because clients would not want to pay a couple $1,000s for a liability that they've never experienced in their lifetime, or just wouldn't see as possible. So it's a tough situation. I mean, it's one of those things. I mean, Phil, do you think we're going to see pandemic coverage going forward?
I absolutely think you're going to see, and I know that the insurance companies are going to get together at this point and find a way to provide some sort of pandemic insurance going forward. It may take them a little bit of time to come up with the product or the rider to the policy. But I can see in the near future that you're going to see some sort of pandemic insurance for businesses, that in the event that this occurs again, that there would be coverage. Pricing and how it would affect going forward, I can't tell you. In the past, you mentioned it right there clearly, like nobody in our lifetime, or at least that I'm aware of, has experienced something like this. So in the past, business owners, if you had presented to them, how about a rider for pandemic insurance? A lot of them probably would have turned it down, only from the standpoint they said, I've never experienced that. Why am I going to spend an extra $1,000, $2,000, $3,000 a year on this insurance? However, at this point, I think most business owners, if you had present them in the future, that will highly consider it. And there'll be a lot of factors that go into that. The type of business, the amount of revenue that's a possibility that can be lost in the event the business is shut down, definitions of what a pandemic is and is not, so that they can find out whether they would be, if those things would be covered. But there's going to be in the future, there will be some changes, and I do believe very strongly that they will come out with some sort of pandemic insurance. I think it will be in correlation or combination with the U.S. government. So in the future, if you see another pandemic, I think that the insurance companies will pay out, and they would probably be the people that would be actuarially adjusting it, meaning at this point, if you're familiar with the PPP loan or one of those loans, the banks are basically, you're submitting to them what your economic losses would be, and they're kind of trusting you on that. And then there may be a point that you may have to ask for forgiveness for that and prove your economic losses. Whereas I think in the future with pandemic insurance, you're probably going to have an actual loss sustained. You're going to have some sort of actuary in your office or adjuster in your office that will actually, to the dollar, find out what your losses were, and they can pay on that. But I do believe that in the future, it's going to be some sort of a rider that will change. There's a lot of insurance policies that I believe that are going to change in the future. It has a chance to affect not only the pandemic, but you have work comp that could be affected in the future, as Christina was talking about. I mean, as the future goes, you're going to have more and more people probably working from home, and there's different ways that you classify on work comp, whether they're in your office working, whether they're at home working, whether they're in the field working. So the classifications will change, which means the premiums will change. How they cover you. Obviously, if somebody's working my office right now on work comp, if they trip and they fall, they're going to be covered under their work comp. In the future, if they're working from their home and they trip over their dog's chew toy, but they're at work, how will those things be covered? Are they considered working? Are they considered at their house? So those things, premiums could go down because they have an at work. The other thing that I can see changing in the future, insurance policy wise, as more people from home, is cyber liability, which we don't really talk about a ton, but when somebody's working, if they're transacting data, obviously they're in your business and they're in your place of work, your systems and processes may have those fail safes in place. At their home networks might not be the same. What if a data breach occurs? somebody working from the home, things of those natures. Nature will change in the future.
Just to piggyback off that really fast,
Yep.
are we going to see pandemic insurance? We absolutely will, just because we do have something now called the TRIA. It's the Terrorism Act, and that obviously came about after 9/11, and that's an option that you can opt out, you can opt in. The price, it depends on how much your total premium is, but you can reject it. So I think it's going to be something similar to that, where if we experience another pandemic such as this, where companies, if they purchase the coverage, if they elect to purchase it, would somehow be split between the government and the carrier. It just depends on the size of the loss. So I think it's going to be very similar to the TRIA. We might just call it the PRIA. And carriers will, or I'm sorry, clients will have options to either choose it or reject it.
So a great question came in.
Go ahead. I'm sorry.
A great question came in about getting back to work. Ultimately, if you have professional practices that will do everything they can to disinfect the office, make it a safe environment, but is there any type of coverage that they could buy to, in case some sort of loss happens that they just can't necessarily account for? They did everything they could, but something still happens, whether it be COVID or something of that to that extent.
Yeah, no, good question. In terms of preventative measures, I mean, I think that's great. Everybody should be, trying to keep their workplace and their employees safe, but there's not really anything, because all policy wording right now excludes viruses and communicable diseases. There's not really put in place now, especially with everything going on. Like, you can't insure a house that's on fire. So it's a good question. It's just, there's a lot of gray area. There's nothing to really put in place that's gonna, attack that specific need.
Right. I mean, like anything, over the course of time, you're going to see that the insurance companies, at the very least, they should put out a lot of content, and from the agencies, your agent and or your carrier will put out a lot of content of back to work type of procedures that they will recommend, and that would help you in the regards, if there is a loss, for them to properly adjust those losses to see what coverages you might have. I could see a lot of information coming out. In fact, we're getting some of it now. It's just not customer facing at this point, of what they plan on recommending depending on the type of business that you own, and how many workers and in what type of spaces they work in. Obviously, some work environments are very, very close together. Some work environments you don't see another employee the whole day. So there'll be a lot of recommendations from the insurance companies out there to business owners onto how to properly reopen their businesses, as far as that is concerned, and as far as keeping things safe and what is required and what their insurance policy may or may not cover. In regards to COVID at this point, in regards to people getting sick, in regards to businesses not operating.
Great question.
Yeah. One of the things we also talk about when we come to COVID, Ari, I know you do the life insurance side of it. So what things, Ari, what's happened with COVID and the changing landscape as far as life insurance or as far as business insurance, business life insurance is concerned? What kind of changes and what kind of things have you seen take effect?
Yeah, so the industry faced a lot of changes and it's had to adapt very quickly from a need perspective and from a new business perspective. First, I'm just going to talk about some of from the need perspective. There's two major types of business life and or disability insurance. One is key person insurance, and the other is referred to as a buy-sell plan. And unfortunately, those coverages are designed to either buy out a company if one of the owners passed away or became disabled, and then as a key person to be able to provide the liquidity to cover that key person, so the business would be able to weather a storm if someone major was knocked out due to a disability and or death. What's crazy here is just how sudden this has impacted some businesses, especially that have had key people or owners that got hit by COVID. And most of these companies just didn't have the plans in place, and we're starting to hear some of the horror stories. So it's just so critical to kind of take this downtime if you're fortunate that your business didn't have such a disruption, to make sure that those coverages are properly in place. First, you need to work with an attorney to draw up the right agreements, and then after the fact, to make sure that you have the proper policies to fund those agreements. From a new business perspective, underwriting is dramatically different because in many states it's a state of emergency. So when it comes down to it, some states you can't get an examiner to see someone who wants to get covered. So we've seen insurance companies really pivot through artificial intelligence to be able to underwrite people. One carrier in particular will go all the way up to $10 million of coverage without an exam if they've had a recent physical within the past year and are relatively healthy. On the flip side, people who are older than 70 or have some pre-existing conditions, it's now harder to get them coverage than it was prior. So it's a changed landscape overall in the market, but now's a great time to kind of just review what you have, make sure it's the reason you bought those policies many years ago still applies today, and it shouldn't be kind of updated to match your needs. Thanks. I could also just pivot one more thing on that from a pricing perspective. We've started to see pricing go up on the life insurance side, and it's not because people think it's because of COVID, but it's really because interest rates are extraordinarily low right now. So as a result, the insurance companies have less money to invest, which is a big source of their profit center. So cost of insurance on long-term guarantee-based policies are really starting to get impacted, and we're starting to see those prices go up. And insurance companies really have been innovative in the product solutions to adapt to consumers' needs. But it's been interesting to watch. One thing I want to reiterate, I mean, we're getting some good questions. There's a Q&A box that's in the Zoom chat, should be, I think, on the bottom of the screen. Please continue to use it and ask any questions that you may have, and we'll be happy to get to them as they come in. Phil or Christina, strategically, what should businesses or even individuals be doing strategically right now to make sure that they're insuring themselves effectively?
Well, I think I'll let Christina talk a little bit about it, but from my perspective, I think to insure yourself properly now more than ever, it's important to have a relationship with your insurance agent. A lot of people out there right now, they don't have a personal relationship. Most people have a relationship with their doctor, they have a relationship with their lawyer, they might, or a estate planning attorney, or different types of professionals, their money manager. But a lot of people take for granted their relationship with their insurance agent. Obviously, you can see with what's going on in the world today, having understanding your coverages before you have to use them is of vital importance as a business owner, and that's something that we preach all day with all our clients, with all our business owners, is that we're really here as a manage of risk and be an advisor, just like your money manager or your doctor is. And so one of the biggest things I think right now, what's important is, one, that you contact your insurance agent or your insurance carrier to find out, most business owners, they mostly know from other business owners in similar situations what the losses that they might, or the most common losses that they might suffer due to their business. It's important to go through that with your insurance agent, ask questions. It's important for your insurance agent to probably come out to your business and do some sort of a loss mitigation to help you to determine what might be there, and to really go through those coverages and make you understand what's going on with your coverages and the pricing. Obviously, we know we want to, everybody doesn't have unlimited source of funds for insurance, but in the event that something goes wrong, you want to make sure that the policy does what it's supposed to do. And come claim time is not the time to find out. A lot of the problems that we saw arise from this business interruption was the assumption that, hey, I have business interruption insurance and I should be covered. And when they found out hey, you're not covered for a pandemic that caused a lot of, heartache and animosity and different things. So really having an agent that goes through those coverages, asking a lot of questions, making sure that they're adequately covering you right now is of critical importance. And don't take for granted the relationship you have with your insurance agent. Most people do not have one, and they just think it's just a price, and they think it is. Most people think that way, and that is absolutely the wrong way to go about it, especially if you have a business that's worth hundreds, if not millions of dollars. That's usually most people's biggest asset as a business owner is the business itself. So you might as well protect it. So it is ultra critical that you start to build that relationship with somebody like Christina.
So we had a question came in, and I'm going to expand on it. The question, coverages are being used differently, both from a personal lines and a commercial line perspective. So from a commercial lines perspective, we know that if a business has 10 automobiles that are covered and they're only using 2, there may be some tweaks that need to be necessary. If they have a manufacturing plant and now all their employees are working from home or not in the plant, a lot of their employees, there may be opportunities to save money while they're doing some office work that was in the plant, and now they're doing office work at home. And then on personal lines, even on the automotive insurance, people are using their cars a lot less, and many carriers have started to give rebates because of it. So how does that affect some of the, not just the rebates, but also we had the change of law that just went into effect in July. So we have 2 questions here on the personal line with the rebate and the change of the law that just passed in July, and then on the business insurance, how we could also make sure that we're insuring efficiently as well.
You want to answer that, Christina?
Yeah. Well, I mean, I'll start on the commercial side, because obviously with the auto reform going on in July, it's not really affecting the commercial side. But as far as like strategies that you could implement now because of the COVID, you kind of touched on it, Ari. I've had a lot of my clients call in and say, hey, I've got a fleet of 10 vehicles. They're all just sitting there. And as long as you don't have a lien holder that needs to see coverage on it, a good thing to do would be reduce it down to storage or just comprehensive only. And then you also touched on it with just reclassifying. I don't see COVID really affecting commercial auto as much as what's happening with the personal line, the auto reform. With that, I mean, everyone's going to have an opportunity. This is especially more important now. Everyone's going to have an opportunity to really sit down and think about bodily injuries limits are adequate for them. So I touch on it, I guess.
Well, and I think it says, what about the insurance in regards to both the virus changes in Michigan and the laws in July? As far as the changes in July, as far as COVID is concerned, those are to medical expenses, and those changes have been in the works for months, if not years. So the COVID's not changing. However, in the future, the question also asks about rebates. We talked a little bit about before. I think you're going to see almost every insurance company out there with some sort of rebates. They do understand that you are driving less, that there are going to be less accidents, there are going to be less claims, less bodily injury claims, obviously, and that are going to pay out. So I think you're going to see every single solitary carrier, or at least a major one, offer some sort of relief for at least the months of April and May and probably June. If it goes on further, it will go on further than that because everybody's driving less. But in the future, what you can see as far as how these can affect policies in the future, you can see premiums go up or down in the future, right? They could go up. Certain aspects could go up, right? There could be, an increase in work comp claims. There could be increasing, depending on the occupation. So you can see premiums go up there. You can see some premiums go down, right? Because there may be less claims on the work comp side too in some areas because they're working from home or doing things. You can see increased cybercrime attacks. And the other thing that pricing might go up or down based on credit. There is a credit component to insurance policies. And obviously if people are out of work at the moment or having trouble paying their bills, or businesses having trouble paying their bills, their credit could get affected, and that could affect their premiums down the road as far as how much they pay.
We got a question about the financial stability of life insurance carriers given the COVID claims. This is really interesting. First, I'll start off that the insurance companies are actually required to reserve for extraordinary events like this. So the balance sheets are required to be exceptionally strong, and when they are not, basically they go into a stage where they're almost bid up for sale, where companies have to almost force that and acquire them. But the claims, the verdict's still out in terms of how the claims are coming into play. Most of the claims that the insurance companies have seen are on a lot of the older insureds as well, and the numbers haven't been catastrophic by any means to the carriers as of this point. There's obviously a concern of a second wave, which is why when it comes to new policies, insurance carriers are putting a lot of restrictions on older insureds. A lot of companies have said, we are not going to insure anyone who's over the age of 80. Some companies have said, we're not going to take any insureds who have certain respiratory conditions. So they're really pivoting to the pre-existing conditions, which they're seeing the highest mortality rates, and not taking on the highest risks as it stands today. So while it's become a lot easier to get coverage for the younger and healthy people, people with pre-existing conditions and who are older, it's a lot harder to get coverage. But from a claim perspective, so far it hasn't hit too hard. But the insurance companies have the highest reserve levels in the history of the industry because of robust market performance over the past 10 years, and along with extraordinary low mortality. So for the most part, all these policies have been outperforming. So it may hit their balance sheets, but most companies will be able to weather the storm well. One other point that, though, when it comes to looking for a new policy, financial strength does matter. So now is a time where you want to look at those quarterly balance sheet, the quarterly reports as far as how their earnings are doing a little bit more carefully than you would in the past to see if they've taken any type of big hit that they weren't ready for. Good question.
Yeah. So Ari, on the life insurance side, what should most clients be thinking about right now when it pertains to their life insurance? What should they be asking or calling or talking to you about, or what's some of the biggest features that you're talking about now on the life side?
It's really interesting. Recently, I had someone who's on the front line, a anesthesia doctor who's treating COVID patients, and he was scared. So he just wanted to increase the coverage, and we were able to do so very quickly and effectively without an exam. And what was interesting about it during that process, the company that we ended up going through worked out, but we started seeing some other companies put some interesting wording upon issuance of policies, which basically said, if you've been exposed to anyone with COVID, regardless if you contracted COVID or not, that they wanted to know about it. And if the answer was yes, they would decline them. So asking questions as far as to getting new policies, as far as to make sure that any situation is covered in advance before you go for the process is more critically important than ever. We're getting carrier updates and underwriting by the day. But from a planning perspective, this is where it's really interesting. There's some great opportunities to do some good planning right now because we have, and I'm really talking about estate planning, because we have the highest estate tax exemption in history, the lowest tax rates since the 1930s, a massive historical stimulus package, which basically builds up more debt. So there's a reckoning that we're going to face in the future, and that reckoning is going to be higher taxes at some point in the future. So for, especially for high net worth individual clients, it's a perfect storm to do really good planning. If they have a business that's decreased in value, there's some estate planning opportunities to take advantage of that temporary lower value of a business. B, from a gifting to the next generation or charity. There's a lot of insurance solutions that the pricing has not yet been impacted, which likely will. They could take advantage now to kind of leave efficient legacies. The planning opportunities like this will not last long. Pricing is going to go up, and the loopholes or exemptions are going to disappear, both from an asset accumulation and a gifting perspective. Years from now, I know people will be looking back and saying, wow, if only we did more planning then than from where it is today. It's almost a foregone conclusion that that's going to happen. We got another question regarding to, I think this may have been answered, but I'll ask it again in case. What about auto insurance with regard to both the virus and the changes in Michigan law? What about rebates on auto insurance that many companies are given because of less driving?
Yeah, I think we were, I was answering that one before. The auto reform in July is a little bit different. I don't really think that's going to have any effect, or the COVID won't have any effect on, it's just kind of crazy timing of everything, because it's been in the works, like Phil said, for probably a couple of years, and finally it's coming about. And honestly, some people might not see a discount just depending on what bodily injury limits they choose. You know, as an agency, we promote coverage versus price. The worst time to find out you don't have coverage for something is when you're in a terrible accident. So, you know, we're always going to promote unlimited in the event that you are in an accident, but the law that's coming out in July does give people the opportunity to lower limits, or depending on if you have Medicare, Medicaid, Part A or B, you could actually, in some cases, reject it. So people will see discounts, but where you'll see discounts, you also have new required higher bodily injury limits. So it might be not as big as a discount as some people may think. It might be a wash. For some people, it could be more. So yeah, that's right around the corner. So all of our carriers right now are changing their systems and their processes to make it easy for our clients to understand what it is that they're changing, and, you know, trying to make it smooth for everybody.
I think it's a great question, but it just reiterates the point that you know, there's a lot of changes in the industry from a pricing perspective, and the insurance carriers are adapting in real time with just the less activity, which is lower claims, and it opens up the market. So, you know, when you have such a dramatic change in claims, which may vary company by company with different exposures in different areas, it makes it a great opportunity to review your coverages and make sure that you're not overpaying for what you have. So I think the biggest impact is not so much the necessarily the law change, but it's just there's so much disruption to the industry, which is going to move carriers to different points in the pricing scale. So it's just a time to really revisit and make sure that you're not overpaying. You know, some of the basics that we like to suggest to most of Telemus clients is we're looking at total coverage first, and then we're looking at most commonly used coverages. So total coverage is just the liabilities, making sure people have umbrella policies. The most used coverage could be water backup. If some carriers, you know, may have a $10,000 water backup when you have, you know, a $100,000 redone basement, you know, it's not going to cut it. So just the most commonly used coverages and the exposure are very important to kind of look at in this time, especially. And then just having that you have a suitable carrier. If you're a high net worth individual, then some of the main brand commercial carriers may not be appropriate. So it's just a good time to take this extra quarantine time and revisit all coverages.
Yeah, I mean, right now, like we said before, it's critical that you everybody, I think with the COVID, and everybody has been affected in some capacity. I don't think there's anybody who didn't have some sort of effect, whether it's them, their family. And I think now people are starting to realize how critical it is to have connections in different areas and the ability to call people directly to ask information, whether it's a doctor or an estate plan attorney or your life insurance or at this point. And like I said before, I think it's just ultra critical that you really sit down with your insurance agent and go through your business or your personal, but let's talk about business for a second, and really once a year, really sit down with that agent and decide what is the best course of action, what's the best way to protect me for the next 12 months. And not just assume that everything is the way it is. And if you haven't had a review in a long time, or if you don't have a relationship with your agent, it's ultra critical at this point that you do, because there's going to be a lot of changes, whether it's the PIP laws with the personal, maybe eventually commercial might change a tiny bit on that too, or it's COVID, or it's something else. This is bringing up the point that you need to understand your risks, and just flying blind is not the way to do it.
Yeah, and just piggybacking off of that, not every policy is created equal. Since I'm kind of on the front lines, I get to see policy jackets. I work with underwriters. I see a million different policies. You'd be surprised how many policies come to me, and they're written as a doctor, but they, not as extreme as they own a restaurant. But I see things that are completely off, and then come claim time, the client's left wondering, like, how did I get this policy? And it's just it's lack of attention to the, reading the policy. There's so many different things that could happen. So it's really important, like Phil said, to sit down, go through everything. I think with the pandemic, the one thing that we're going to see is, and I think Ari, you kind of mentioned this too, is policy wording will eventually change, because right now it's so broad, and at the same time there's so many specific exclusions. I think we're going to see more clear-cut rules to, or guidelines to what's covered and to what's not, because not every policy is created equal, and it's just crazy what I see. So.
Not every policy is created equal, and you brought it up, Christina. Just like your thumbprint, every person and every business is just a tiny bit different, and so we really take the time to try to customize a policy for a specific need. There are cookie cutters. The example would be, a pizza place. If you took two pizza places and they were right next to each other, to the average person, they look at both pizza places like it's a pizza place, but one might have delivery, fryer, one might have more workers, some might do different things. So you can have two pizza places that are insured completely different. So not everything's the same, but to a business owner, they might be like, hey, I'm just a pizza store owner. It's the same thing as this pizza store, is the same as this one, but it's really not. So that's why the relationship piece and understanding your policy and coverages and going through it is really important. Obviously, wish we could cover everybody for business interruption insurance during the COVID. Unfortunately, that's not the way these policies were written. But I do believe very strongly in the future that they will rewrite them to cover pandemics of this nature.
Sure.
I'll tell you, on the life and disability insurance, on disability, I see it all the time, the definitions of this disability. I'm helping two different clients right now actively with claims, and they have multiple policies that we didn't sell to them, but we're just helping from a servicing perspective. And I'll tell you that the definition that corresponds with the company based on the way the policies were written is dramatically different. And some of those policies are going to pay and others are not. On the life insurance side as well, when you're looking at pricing, especially as it pertains to permanent insurance, some policies have a maturity age of 100, which could mean that they get the cash value, not the death benefit at age 100. If someone's in their 80s, that's a major concern. If they're in good health in their 80s. And you also see from those permanent policies, some have return of premium. You could get your money back if you decide you don't want the policy anymore. You could have chronic care or long-term care where the death benefit could be used for long-term care. One policy can have it, one policy cannot. If you're charitably inclined, there's some companies that have charitable riders built into their policy where a percent of the death benefit will go to a charity. They're just not all created equal. Some companies have very aggressive assumptions in their performance on the cash accumulation, but they're based on realities that we don't feel as comfortable with other company projections. So illustrations of companies don't always really reflect in a way that the consumer could understand the differences between one or the other. So it's really important to make sure that you have the trust within the advisor that you're working with and the team that you're working with. Ideally, we like to talk about team planning with financial advisor, your life insurance advisor, your property and casualty advisor, your estate planning attorney, your CPA. Getting the more people on the team with a cohesive plan is critically important to make sure that everyone's on the same page and the best planning for our individual and business clients that we have. Is there any other questions that come in? I encourage you to hit the Q&A. We have a couple more minutes of time where you'll have our uninterrupted attention, but type it in on that Q&A box on the bottom if any other questions come up. So far, we've gotten some really good ones. So, one thing that the three of us were talking about earlier, it's just a lot of our business clients have been trying to get the PPP loans, and the way that that this whole stimulus package came about as basically being distributed for the banks. It's interesting that it Phil was talking about this. What do you think would have been a more effective way to distribute the funds of the stimulus package?
Well, I mean, I think my personal opinion, and I think that if they had a do-over, they might do it this way. I think that instead of putting a couple trillion dollar stimulus into the country, they might have gone in the future. They may have approached some of these large insurance companies who are set up already actuarial, adjustment-wise. They can adjust losses. They do this all the time. If your business did suffer a physical loss where the business was closed, they do have adjusters that come in there and they determine what the actual sustained loss was, and then they pay the business insurance. I think that the government might have been better off had they gone to the insurance companies and said, hey, we'd like you to pay these business interruption policies and adjust them, and we'll indemnify you even though we know you're not supposed to be paying them. I think that the delivery system might have been a little bit easier on the insurance company side than this wild west of PPP loans, but that's just my personal opinion.
But then, what you run into is some people don't have business insurance, and some people don't. The business interruption falls on a commercial property policy. So you might have just like a normal GL and a work comp. And if you don't have the property portion, then
sure.
Good theory.
So I want to close out, give you some of the key takeaways that we spoke about. And Phil, Christina, if I missed anything, definitely tap in. And if anybody has any other questions, feel free to ask away, and we'll try to get to it prior as well. But the biggest takeaway is unfortunately that a lot of the business policies that were written, unfortunately, they're not going to cover because of this pandemic exclusion. But there are still opportunities to redo your coverages and make it more efficient with workers now at home or a complete different environment for your business. So there's definitely opportunities to improve and make your policies more efficient. The market has had disruption, so it's time to, as well, that you can take advantage of that disruption and very likely redo coverages and save money with potentially better coverage. That's both on personal lines and business coverages. In the life insurance business, there's plenty of opportunity to actually get coverage easier than you would prior to the pandemic because of the lax rules with underwriting, the carriers being sensitive to not sending out examiners where people don't want to have someone come into their house. So it's easier to get coverage in many situations than it has been before. So it's a good time to take advantage of those opportunities. From an estate planning perspective, the environment has never been better to really do sophisticated, comprehensive estate planning than it is today. So there's a lot of opportunities to really improve your situation with the current environment. We had another question that came in that if they decided to disinfect their office building due to COVID risk before bringing their staff back, is that covered under any business BP policies?
Yeah, I think I had mentioned that earlier. So if I decide to disinfect my office building as a precaution, I mean, no, I mean, I think everyone should be disinfecting to try and keep their employees and everyone safe. But there's nothing preventative, unfortunately, that you could do to maybe put like a rider endorsement on your policy. Just because as of now, anything pandemic related viruses, diseases like that are going to be excluded. So I would still promote the safety, but there's not really anything that you can do at this point. But good question.
However, in the future, if they do offer pandemic insurance, that may be one of the questions that they're going to ask in order to get that insurance would be what policies or procedures do you have in place to disinfect your workplace, to make sure people are socially distancing. Those would be and that might drive the price of what somebody might pay in the future for that coverage. If you have written policies and procedures in place on how to disinfect your workplace and keep people safe, you might pay a lower premium than somebody that may not have those things. So I can see very much those types of questions being asked of you in the future, and you could, just like you have workplace injury procedures, or you have claims procedures, or you have cyber type procedures where you protect information. I could see in the future where you would have insurance type of procedures to protect your workers from a pandemic. I can see that.
I wonder, sometimes you could, if the business is big enough, I wonder if there's opportunity to take it to a Lloyd's or specialty type coverage, which would individually underwrite that type of coverage, or if those type of specialty markets have started to create those products. Which, have you heard of it? Have there been any traction? Have you gotten any information about any of those carriers to put their foot in the water, take a gamble, and be first to market with that type of policy?
With the pandemic?
Yeah, or as far as the specialized risk as it pertains to their business in the pandemic.
I can tell you this, every single one of my carriers, every one of them right now is talking about pandemic insurance in the future, every one of them. I don't know what they're going to do, but they're all talking about it and what they're going to do for the future. Every one of them are thinking about it.
Right. It's definitely something that is critical to come up, and the insurance companies are going to be concerned about covering such liability because it's massive risk for them. But that's what insurance is really for, to be a lot of it is catastrophic coverage. So you build reserves with other risks to cover some risks that come out of nowhere. So the whole pool of pooling unlikely events together is what insurance is built for. So hopefully, it's a tough one, especially after it just happened. The carriers are probably going to be slow to really do it effectively, but they could easily do it if they put a limit to their losses in place as far as what they would cover up to in those events.
Sure.
So we'll see how it plays out, but I think it's going to come, sometime in the future. It's just going to be how they're going to innovate and create that. And Phil, Christina, I don't know about both of you, but we're getting updates on the life side daily, and even on the disability side. So the innovation is happening, but these are big companies with major liabilities, so they have to do it very carefully and effectively. So it may be some time before we actually see products that businesses could tap into.
Yeah.
So there's some great information that we covered. We're going to be following up with, we'll send out some information to the attendees that may be relevant to the webinar that we had today. If you have any questions, you can email any one of us in the follow-up. You'll have the three of our contact information. And I thank everyone for attending. This was a lot of fun for us from our individual homes, and hope you enjoyed the background and the conversation, and have gained a lot from it.